Hello and welcome everyone to another wonderful webinar brought to you by Leyton. My name is Judy Olivenza and I'm joined by Bryn Arsenault. We will be moderators for this online event. We are incredibly thankful you've joined us for today's webinar, Money in the Making, Innovation Funding and State Tax Strategies for Manufacturers. Our amazing presenters today are Brian S., tax attorney and Leyton's state and local tax practice lead, and Gabriel Derr, business development manager specializing in innovation funding, research and development tax incentives, and grants. Prior to commencing this webinar, we are going to cover a few housekeeping items and technical checks to ensure a great learning event. If you are experiencing any technical issues, please let me know via chat message, or you may refer to the quick reference guide document that can be accessed from the handout section of this webinar. The questions pane is also where you can submit questions or comments to our presenters. This webinar qualifies for 1 CPE credit. This credit will be available within 24 business hours, and you will be notified at the email used to register for this webinar when the credit is issued. To earn credit for today's webinar, you must stay logged in for a minimum of 50 minutes and answer polling questions. There will be 4 polling questions today, and to earn credit, you must answer at least 3 questions. Please be informed that today's webinar will be recorded, and if for any reason you get disconnected from the session or need to log out and back in, the webinar software will keep track of your time. We recommend that you download today's presentation materials, learning objectives, along with a quick reference guide document, which can be found in the handout section of this webinar. Now I'll turn things over to Brian and Gabriel to kick things off.
Thanks, Judy. That was well done. I think you had the hardest job there is, memorizing all that, right? At least we get to talk about stuff that we talk about every single day, so this shouldn't be too tough for Gabe and I. But hello, everybody. Thanks for joining. I'm Brian S. With me is Gabe, as Judy mentioned. So appreciate you all being here for Money in the Making. Innovation funding and state tax strategies for manufacturers rolls right off the tongue there, but we're happy you're all here. So let's jump in. My name is Brian S. As Judy said, I lead our state and local tax practice here at Leyton. Have been here for about 2.5 years. Prior to that, spent about a dozen years at Big 4, top 10 CPA firms, built out a solid practice. Been working with manufacturers a lot of my time, so happy to be on the call with you guys. Gabe, over to you.
Yep, Gabriel Derr. I've been working in and around innovation funding, government grants, tax credits, deductions for the better part of 8 years now. I head up a team of consultants across the U.S. And for bonus points, I'm the father of 5 children, right? So go careful in the world.
Yeah, staying busy. Now, are any of those kids going to walk into this room as you're presenting, Gabe, today?
I've locked all doors. Animals are away. We're safe.
Okay, fair enough. Thanks, Gabe. Now, I've also wanted to make an announcement that Judy was kind enough to give me controls of the slides today. So hopefully I don't mess that up as we go through this. Bear with us. But just a quick introduction to Leyton. Gabe, if you want to do that.
Yeah, who is Leyton? What does Leyton do? We're an international consulting firm. Now, in short, we are connecting businesses to various forms of government incentives. Usually they're complex, they're misunderstood, and that's where our team of experts come into play. We've been around for 28 years. We're in 17 different countries. Numbers there, a lot of clients, whole lot of clients and a whole lot of employees that, in short, I mean, we're connecting our clients and across different industries to various forms of government funding.
Yeah, and like it says there, we do have offices in Boston and San Francisco, but similar to probably a lot of people on this call, I'm in Scottsdale, Arizona. Gabe's in Pittsburgh. We have people in Chicago, Florida, everywhere around. So I would love to see everybody write in where they're from. Maybe we can connect over some coffee sometime soon, but make sure the chat is working as well. And I'm not sure if Judy mentioned it, but please feel free to shoot any questions that you have as we go through this. If we have some time, we'll kind of pull some out and answer them. And if not, we'll definitely get back to you as soon as possible, before the week's end and get you the answer. Okay, forgot I was still on slide duty. See if I
Click.
can make that work. Click. Here we go. Here we go.
All right, basic agenda for today. We're going to go over the landscape for innovation funding, what that looks like. And Brian's going to talk about some areas that are often missed when it comes through SALT taxes and refund reviews. I'll dive deeper into R&D tax credits, talk about the unicorn that is government grants, pretty exciting stuff. Talk about HR 1, the One Big Beautiful Bill. And there, if we do have time, we'll answer some questions as they're available. As Brian said before, don't be afraid to use the chat with questions. There's no bad question to be asked. We'll follow up with you accordingly. No,
Yep.
you were ready to go.
Yeah, all right. I was rolling into it, right? Yeah.
Fair enough. Fair enough.
Okay. So the intro to what we're talking about today, and Gabe, I know you love this slide. It doesn't look like much, but I think it gives our clients kind of a picture, or manufacturers a picture of how they can view all the things that we're talking about today.
Yeah, it's a pathway, right? So we're going to start with just a conversation to explore state and local tax, research and development, as well as grants and incentives. Leyton, we like to take a holistic approach to identifying, capturing, and delivering these incentives. And we're able to do so by understanding our clients' past, catching them up to present day, and then exploring the future with them. Several of these incentives offer multiple year lookbacks, whether it's several months, several years, 10 years, depends on the state and the incentive. But when we're looking back and in the rears, we're looking for areas of opportunity for our clients to capture what is rightfully theirs. In many, many instances, when we're having these conversations, it's the first time they're hearing of these incentives, and they're wondering, why hasn't my CPA brought this to my attention? Isn't this something they should do? We have a heart for CPAs. The reality is that they're underwater. They're overworked. There's 13,000 jurisdictions. There's thousands of lines of tax code. There's a lot going on in their world. They don't have the bandwidth to get into these technical incentives. So we'll partner alongside with our client CPAs and work as a natural extension to what they're doing. We like to say that the government is well-intentioned. They make a lot available, but they're just not strong communicators. Right? So if you could think back a couple of years, the employee retention credit was quite the thing. It provided a lot of funding and money to businesses that were really in need, but the IRS website was not up to date. It was not giving real-time information. It created a lot of confusion within the marketplace in terms of who qualifies and for what amount. And in the end, it ended up being a really good thing, but it took experts to ultimately define it and capture it.
And we're not, if there's any CPAs on this call, we love you too. Like I said, I come from accounting background and worked with a ton of CPAs, and they're great as well. It's just, we know that sometimes either you specialize in certain areas, maybe not this stuff, or you're filing income taxes, you don't have time to step out and do a full R&D study. So we're here to help out with that, whether you're a CPA firm or a manufacturer. And I like to talk about this slide as Charles Dickens' Christmas Carol. I know we're quite not to that holiday season, but the ghost of Christmas past, present, and future. And so I look at this slide as saying, hey, what have you been doing? Let's go get you refunds for that. What are you currently doing? Let's go get you credits for that. And what are you about to do? Let's go get you grants for that. So,
yep, love it.
If that puts a pretty picture in your head.
I just read that book 2 weeks ago. So, yes.
Okay. Well, you got a leg up on me. I don't know if I've ever read it. I've definitely seen it live on TV, all the different stuff. So, all right. So we're going to get into some things here. But before we do, wanted to pop in. Oh, Judy's here. Take it away.
Thank you. I'm just going to now present the first polling question. And as a reminder, this is the first of 4 questions that will be displayed during the webinar. And in order to receive credit, you must respond to at least 3. So here's the first poll. Have you participated in a sales tax refund review? So go ahead and get your response in before the poll closes.
Yeah, I think Gabe's got some harder questions further along in the presentation. Mine's there's no wrong answers here.
I have one of these.
Okay, all right. You're like the the tough professor in school that really asked tough questions. And I'm just like, hey, if you're here, I'm giving you some credit.
Hey, it's the hardest part. You just got to show up.
Yeah, right.
All right, and we're going to close the poll in 5, 4, 3, 2, 1. Thank you.
Awesome. Now, Judy, are those results shared with the everybody here?
Yes, yeah.
Okay.
So it says here 15% said yes, it was great. 30% said I've heard about them but never do. Yeah. And 55% said come again.
Yeah. Okay, great. Good amount of people that will learn some things here today. And for those that said yes, it was great, please feel free to chime in about how great it was. Okay, so let's talk about these refund reviews and why they're great for manufacturing. State and local tax, one thing we need to understand is that it is not just refund reviews. When we talk about state and local tax, a lot of times we have clients or businesses that say, yeah, I have a CPA, they file my state income tax return, my SALT is covered. And yes, that is a part of it, but along with it, there's sales tax and property tax and credit incentives and all these other things that we're going to talk about today. So just making sure you have an understanding that SALT is the SALT umbrella covers a lot of things. With that is a couple of these bullet points that I called out. One is due diligence. So sometimes we ask our businesses, hey, do you have an exit strategy? Should the day come that someone reaches out to you with deep enough pockets, would you be willing to sell your business? Are you looking to acquire new businesses? All that kind of stuff. State and local taxes is one of the biggest issues that come up during due diligence. So you want to make sure that you're aware of your SALT blueprint leading into the next bullet point. So just making sure you understand, where do I have employees? Where am I selling my products? Where am I purchasing my products? All these kind of things. Make sure you have a well-rounded understanding to strategize on your state and local tax stuff. With doing that blueprint, it allows you to be what I say, quote unquote, audit proof. We put the quotes there because, of course, audits sometimes are at random. You reach out, an auditor is going to ask you some questions, but we want you to be at a spot where, you know, you reach out to Gabe, the auditor, and say, yeah, I dare you to audit me. I know I'm squared away. There's nothing for you to get. So feel free to ask me any questions you want. So that's what I mean by being audit proof. And then, of course, just going forward, if nothing else, peace of mind, making sure that your CPAs or your accounting team, the software tools are doing things correctly, taking advantage of any credits out there, all that kind of stuff. So really, the state and local tax umbrella covers a lot of things. Again, kind of a slide of what does it entail. A lot of things on here. We could have a whole nother presentation about nexus studies and a whole nother presentation about voluntary disclosures, et cetera. But if you recognize any of these buzzwords, need any help with it, it does fall under the SALT umbrella. Call your local SALT provider, me, and we'll help you out with any of those issues. You can also see exemption certificate management, which is huge for manufacturing companies that are trying to buy things exempt from tax and sell things exempt from tax, property tax, all this kind of stuff. So really, we're going to focus this third column for the next few minutes, sales and use tax refund reviews. And for those, what was it, 10%, something like that, that said, yeah, I've done a refund review and it was great. Why don't you take a second and do what this woman is doing? Give yourself a pat on the back here and say, hey, I've taken care of it, because it can be really powerful. All right, getting into the nuts and bolts of refund reviews. For those of you that remember your elementary school days and how we explain things, is the who, what, when, where, whys, and how. So I kind of broke it down in that way to try and make this a somewhat complicated subject as simple as possible. Obviously, we know who the who is, all the manufacturers that we've reached out to about this webinar. But really, what is a refund review, aka a reverse sales tax audit? I told Gabe a long time ago, man, we should have copyrighted the refund review branding, because refund sounds much better than an audit. But I think that language is now wide enough out there that we might not get a copyright on it. But one and the same. If you've ever heard of a reverse audit, I mean the same thing with a refund review. And so what a refund review is a situation where your business or the manufacturing company has paid more sales or use tax than they needed to. That's what's happening in its simplest form and the easiest way to explain it. We are looking at your business as a buyer here. And the reason that this is important to call out is because a lot of times when we think of manufacturing companies, or we reach out to manufacturing businesses and use the word sales tax, they say, oh, you know what? I'm a manufacturer. I sell to a reseller or a retail company. I don't need to worry about sales tax. That's on them. And there's some truth to that. But really what we're looking for here is your purchasing activity as opposed to your selling activity. So just making sure we've kind of separated out the differences there. And then what do we get out of a refund review? Cash back. Best thing in the game. It's not a deduction or a credit that you need to take onto a income tax return or carry forward until you have, you're out of the red, so to speak. And I'm not here to diss those things either, right, Gabe? So I know that the R&D tax deduction is huge, our tax credit is huge. It's very powerful. But if you came to me, Gabe, and said, hey, can I give you cash or a credit on your income tax return in April, I'll say, I'll take the cash.
Cash all day long. Yes, fair.
So that's really powerful in the refund review. Next category here is why does this happen? Why is this even a thing that exists? There's obviously several things that can occur. Oftentimes it's a combination of a couple of them, but really what you see is your vendor is required to collect sales tax on their sales to you as a manufacturer unless and until you give them an exemption certificate. So I'm going to have to use Gabe T-shirt company. That's my favorite example. It's pretty simple and people can keep that straightforward. But with Gabe is running a T-shirt company and he's buying silk and cotton and buttons. He's buying machines to thread his shirts or stamp on logos onto his shirts. All these things that he's buying, his button vendor should be charging him sales tax until he gives him an exemption certificate. So if you have not set that up, you're getting charged sales tax. So keep that in mind. I put /new vendors there, right? Because a lot of times we'll say, well, I've given my vendors an exemption certificate, and we'll find that Gabe forgot that he changed button vendors, right, last year. And so that new button vendor doesn't have the exemption certificate. So he's now getting sales tax charged on him again. If sales tax is charged, your business is required to self-remit use tax. This doesn't come up as often. If you're not well versed in sales tax, this bullet point might be a brand new concept to you. The easiest example is, Brian, who sits in Arizona, goes and buys a car in Oregon because Oregon doesn't have a sales tax. I bring it back to Arizona. And when I register it with the state of Arizona, Arizona is going to say, hey, you need to self-remit use tax since you didn't pay sales tax. So I've run into this situation a few times talking to manufacturers where they say, hey, you know what, we don't pay sales tax, but we are remitting use tax to the state when we do our filings. And I say, hey, let's review that. That might not be entirely accurate. The third bullet point here is kind of one of the most common reasons this occurs. Gabe has his T-shirt company. He's less excited about reviewing the invoices that come in from his button vendor. He's more excited about doing all the marketing and the projections and then calling Brian S. and telling him about the 2-for-1 T-shirt deal that he's doing, right? All that glamour stuff. Or maybe Gabe has invented a new type of shirt, crop tops for men or something like that.
Mesh.
Yeah, mesh crop top, of course. I think that exists, actually, Gabe. But that was something you had back in the 80s, right?
Mm-hmm.
So anyways, he's focused on other more exciting things. He's not reviewing the the invoices that come in through the door. And similarly, we have manufacturers that say, hey, shouldn't my CPA be doing this? Shouldn't my accounting firm or accounts payable be doing this? Theoretically, yes, maybe. However, they are also busy doing other things, and they might not have the niche to do it or might not know the ins and outs of these exemptions. So that was a long-winded answer to say, yeah, there's a lot of reasons this might occur. Where is pretty simple. It just occurs to where the products that you're buying things get shipped to. So typically in a manufacturing instance, it's just where you're located, where you're buying your stuff. And when should we be doing a refund review? Now, if anybody's on the chat, let's see if I have the Q&A pulled up. If anybody would type in, if you guys remember the J.G. Wentworth commercial, there was a great jingle, and they always opened up the commercials saying one particular thing. Gabe, do you remember this?
I do.
Okay. Well, do you remember what they were saying?
Get cash now.
Get cash now. There was always this random woman that was hanging off a balcony, right, looking directly into the camera, and she would say, "It's my money, and I want it now." For anybody that's born, in the 80s or maybe early 90s and later on the call, they should get that. If not, I apologize for my for my very outdated reference there. But the point is, this is money that you have spent, right? If we go back to what a refund review is, it's a situation where you pay tax you didn't need to. This is money that you spent that you did not need to spend. It is your money. Let's go get it back right now. And the reason we want to do it right now is because the look back period for these are a rolling 36 to 48 months typically. Meaning, if we did a 4-year look back for a manufacturer in Texas, that would currently, as of today, be October of 2021 to September of 2025, if I've done my math right. And as soon as we flip over to October of 2025, now we've lost a month on the back end. So we're not able to get earlier purchases, refunds for earlier purchases. So we want to do it here and now. And then when we go through it, right, you put up exemption certificates to not pay sales tax in the future. So the better you can knock this out, the more lucrative it's going to be, the easier it's going to be for you. The refund timeline. When should we expect our refunds back? Best case scenario, we say 2 weeks. You can see in the next column there how, right? You're just reviewing your purchasing activity, reaching out to your vendors, and asking for these refunds, right? So when Gabe when Gabe buys his buttons from his button vendor, and that button vendor collected tax on that button previously, the button vendor isn't keeping that tax. They're actually giving it to the state that he's located in, right? So it's not money out of the vendor's pocket when we come back and say, hey, can we get that refunded? They're going to get refunded from the state. So that's the quickest and easiest way to do this. State Department of Revenues usually operate a little bit slower than the speed of business. And so we first go to the vendors, but you can always go to the state to get your refund as well. It just takes a couple months usually to get that refunded. So that's the what, why, where, when, and how. I know this was a wordy slide, but it kind of encompasses all of the nuts and bolts, as I said, of the refund review. Cool. Again, someone shout at me if I'm not seeing any questions and answers, but I'll keep moving. The but. So this is 3 of the most common kind of but. What about this questions that I get when we talk about this? I have clients say, hey, we haven't got audited by the state recently. We don't want to open our doors to any questions or concerns or anything like that. Not that you're doing anything wrong, I'm sure, but it's never fun to deal with an auditor. So it's important to understand that these refunds are very black and white. It's not a gray area. So each state is going to have some sort of state statute that says, if you're a manufacturer, if you're buying machinery, you can purchase it exempt, plain and simple. And then they'll have accompanying statutes that say, if you did pay sales tax on that machinery, you can go back 3 to 4 years to get it. So very cut and dry, very easy to do, or straightforward, I should say. The other thing is, well, I think I've done this before. I think I'm all over it. I'm buttoned up. Don't worry about it kind of thing. I always say, best case scenario is that you don't find anything, right? It gives you that peace of mind to know that I haven't been missing out on money. If there's, controllers on this call or plant managers, you can go to your boss and say, hey, look, I haven't missed out on anything. Alternatively, if you're new to the company and you do find money, then you go to your boss and say, look what I just found our company, right? So it's a win-win. And it's not very long or cumbersome to do, right? If you don't want to pull invoices from 36 months or 48 months, you can start with a spend per vendor. Where do we spend our most money? Let's look into those particular invoices. Maybe we can start with a 12-month look back, something like that. So it's really not too long of a time to look into this. And then the refund review. So the who, right? We didn't get to the who, but I know you all knew what it was. It's manufacturing, of course. Manufacturers are fantastic for these refund reviews. That's because they are in every state and they are broad language. So that means if you are a fabricator, a processor, if you're doing mining, I always call out breweries and vineyards because I try to get a free bottle of wine or a 6-pack in there, something like that. But you're manufacturing beer, wine, health sodas, if you're into that, any of that kind of stuff. So this covers all of this manufacturing type activities. And not only that, it covers a vast amount of spend or different types of spend. So you see on there machinery, equipment, materials, all those buttons, silk and cotton that Gabe is spending, but also the machinery and equipment. So if he has big machines, and this very easy example, to thread shirts, or like I said, put logos onto shirts, or cut shirts, anything like that, that's machinery used in the manufacturing process. It's also exempt. The packaging that he buys to put it into a package and send it to Brian S. when he buys that mesh cutoff shirt, that's going to be exempt. And then on top of that, we are able to do repair parts, repair services. That's exempt as well. So sometimes we talk to manufacturers. They're like, hey, I bought a $10 million piece of machinery, but it's 10 years old. I'm not going to buy another one anytime soon. However, I do have to get it serviced every year, every 2 years. All that stuff can be bought exempt. I put forklifts on there with I should have put an asterisk on there, right? It says some states. It's not in every state. There are some caveats to it, but it is a big ticket purchase item. So if you're buying forklifts, we'd want to look into that. Quality control software, new construction, real world story. We had a client in Texas, thought they were buttoned up. We asked them about new construction. They said, yeah, we actually expanded our plant recently, was able to get them 6-figure refund for that. So there's lots of things that you can do in the manufacturing realm to get exemptions and refunds. And then I underlined the utilities part. If I were doing this presentation in person like I was pre-COVID, I would say, hey, raise your hand if you've been doing manufacturing more than 10 years or something like that. But maybe you can write in the chat if you've been doing it more than 10 years. What I have found, interestingly enough, is that if you've been in business for a long time, sure, you might have heard of these exemptions before. You're taking advantage of it. Again, I always say double check it. Vendors change all this stuff. But for some reason, utilities slip through the cracks. And so your electric, your water, your gas, any of those types of utilities, going back to Gabe's t-shirt example, the electricity that he uses to power his machines, sometimes even the lighting and the heating in that area can be exempt. So that can rack up to a lot of money and a lot of refund potential. And then the final point there is just, yes, some states you're going to need to do a use study, meaning we're going to have to bifurcate out the amount of electricity towards manufacturing stuff, and then your microwave in the kitchen that you use. But any electrical engineer worth his weight in salt, see what I did there, should be able to do that study. And then kind of just to wrap up on the refund reviews, I'll toss it over to Gabe. He's been patiently waiting, chomping at the bit to tell you about all the things he has to offer. This is just kind of a stereotypical case study, right? We had a manufacturing client, revenue about 25 million. They've increased. It's been awesome to watch. But again, any of these reasons or combinations of reasons might be, I say if you're a manufacturer at all, you should be doing this. But if you're not reviewing your invoices, if you have heavy spend on those things that I just talked about on the last slide, if you have new CFO, new controller, any of that stuff, you'll want to dive into this. And the review start and benefit study, as I like to call it, again, using good words like benefit and refunds, only takes about a week or two. After that, you submit your refund request, get that back in 2 weeks to 2 months. And in this particular case, this manufacturing client that we worked with said, hey, we're buttoned up. We've done this before. We talked about utilities. They said, you know what? I did look at my utility bill. There is tax on it. See what we can do. And so we were able to do that and find more equipment that was exempt, and we got them back about $320,000. So this is really powerful stuff. Remember, this is cash back. Use it to buy new machines. Use it to throw a happy hour. That's always my vote. Let me know when you're doing it. I'll show up. But yeah, this is kind of the power of a refund review. Whew, I did a lot of talking there. So I think it's time to pass it over to Gabe. Is that right, Judy?
Yeah,
Nope,
well,
Judy
we have our next polling question coming up, which I'm about to launch. So have you done an analysis on your innovation funding strategy? So this will be a good segue into what Gabe will be talking about next. Responses, options are yes, we review it regularly. Yes, but only once in the past few years. Not yet, but we are planning to. And no, we haven't looked into it. So go ahead and get your responses in.
Another option should have been, what is an innovation funding strategy?
That would be next. That would have been another option too. All right, so we'll give people a couple seconds to respond.
Yeah,
and we'll give you guys another couple seconds to respond. But I've seen a couple questions come in through the chat. If we haven't responded to them yet, we will definitely get to them later on at the end of the webinar if time permits for a bit of Q&A. Otherwise, we'll respond to you directly afterwards. So this poll will close in 5, 4, 3, 2, 1. And back over to you, Gabe.
Sweet.
Yeah, and Gabe, I'm sorry. I said I was going to pass it over, but I did see a question asking about state and local taxes and innovation. So FYI, there's going to be a little bit of that at the end, but also any of the innovation that manufacturing is doing can also be eligible for these refunds. So that's kind of how it ties in. And Gabe's going to go really into depth in that here. So now I'm setting you up on a tee, Gabe. Go for it.
I appreciate that. So kind of you. All right. So what? Here we go. R&D tax credits. Click, Brian.
Yep.
What is the R&D tax credit? That is a great question. For a lot of folks, the problem is actually in the name itself. Most manufacturers don't associate themselves with research and development because they're thinking research and development. That's lab coats, that's beakers, that's something that's very, very scientific. But if you take a step back and you take a high level conceptual understanding, when you know that it's a reward for businesses that are creating or improving upon an existing product or process. That's manufacturing all day long. You're making things and you're looking ways to improve upon the things you're making and how you're ultimately making them. The R&D tax credit provides a great way to generate a tax credit that will offset your tax liability on a dollar for dollar basis. All right. You are also have the opportunity to bank these and carry them forward for up to 20 years. If you're in a position where you're considering maybe selling the business, having the R&D tax credit on your balance sheet is an asset. It increases the company's value and it frees up cash. Click.
Yep.
History on the R&D tax credit. Once Brian clicks.
I'm trying to click, I promise.
All right, so I'll tell you about the history of the R&D tax credit. It's been around since the 1980s. And what I want you to do is think about the automobile industry around that time, Port Detroit, Michigan. Manufacturers pulling out, offshoring, for what reason? Cheaper labor, cheaper supply costs. The detriment was to the U.S. workforce. Good jobs were lost. The government realized that that was a problem. And so they put into place the R&D tax credit. Now, you can see in the slide, it was made permanent in 2016, and the code has seen a lot of changes from then until now. Even recently, there's been some changes, but it is a permanent part of the tax code. And we're encouraged to use a very broad definition of research and development. Think evolutionary, not revolutionary. You simply need to be creating something that is new to you. It doesn't need to be new to the world. It just needs to be new to your business. In manufacturing, we see this all the time. Your competitor XYZ is doing something pretty significant, and you realize, hey, I can do that, and I can do that better. And you're creating your own iteration of it. That's all we need to see. For manufacturing, the expansion of the code has actually included and increased the amount of supply material expense we're able to capture. So if you think of your own developmental process from conceptual idea to commercial viability, there's prototyping, there's iterations, there are changes that go on there, and that's a lot of supply cost that is wasted, right? We're able to capture that through this process. So in short, this program will help companies remain competitive by offering a tax deduction, and it will encourage American businesses to continue to invest in developing new and improved products, and more importantly, employees, technical employees within the United States. Next slide, please, sir.
Look at that, I was on it.
I love it. All right, so what drives the value of the R&D tax credit? The answer is pretty simple. We're going to start first with the activities. All right, I want you to focus and listen to these words: design, development, improvement of new or existing products, process, formula, invention, or software, including technique. Those words I just mentioned you're going to hear a lot and on repeat, because it's the areas that we're focusing on within your businesses. All right. These activities need to be improvements in the functionality, performance, reliability, or quality of the business components. What they cannot be, absolutely cannot be, is simply aesthetic changes. All right. Once we've identified the projects you're working on and we qualified the activities, we then look towards the expenses over on the left-hand side. We're focusing on wages. It's largely a wage-driven incentive. We're looking at direct labor, supervisory costs, as well as supportive wages as well. We can look into your contractors, as well as your materials and supplies, and even some cloud computing costs. What I like to say when we're walking through this with our clients is that we want to understand your vendor ecosystem. We need to know who are you partnering with in either testing or developing, the people that are outside of your immediate organization, because they too can qualify, but just at a lower percentage, right? But it still is a part of that pool of expenses that we're looking for. All right, potential benefits. Nothing is guaranteed, right? So there is analysis that needs to be done. We need to do a very thorough analysis of all your activities, the expenses, your contractual language, whether the business has been profitable or not. We have to understand all of this. However, what's in it for you are federal and state credits. All right, they will reduce the overall tax liability on a dollar-for-dollar basis. And they can also go back 3 open tax years. All right, and when applicable, you can receive a potential refund on overpaid taxes. It's a refund. It's a cash infusion into the business. Think of the difference between federal and in-state as the federal credit is your steak. The in-state credit is your Brussels sprouts, although I love a good Brussels sprout. There's a big difference. California has an amazing state credit. Michigan is pretty good as well, but the federal weight is really going to drive the overall value of the benefit. When we look at payroll tax credits, this is really geared more towards younger companies, startups. And the government's going to define those as any business that has less than 5 years of experience, generating less than $5 million a year in revenue. Different with this credit is that you can't go back historically. You can only capture this credit in the current year, and there is a cap of $250,000 a year. Next slide, Brian.
Yes, sir.
All right, 4-part test. This could be foreign language to a lot of people. Now, what is it? What qualifies? You see that first sector again. We're talking first quadrant: product, process, technique, formula. These are all the questions we're kind of asking. We're taking the next step to understand the technical nature when it comes to hard science principles. If there's engineering involved, it's going to qualify. If there's data testing analysis, most likely going to qualify as well. Process of experimentation, you're looking at all the various alternatives into the process as well, and then ultimately eliminating uncertainty. And we're focusing on these when it pertains to performance, function, quality, reliability, not aesthetic improvements. All right, so how we are doing this is actually with our team. We have a team of lawyers, engineers, folks with industry and accounting backgrounds that understand manufacturing intimately. And this just ensures that our work is A, legal, B, ethical, and C, it's technically valid. All right. Next slide.
Yeah, the legal one's important, right?
Kind of important. What's kind of important there? Landon, I see your question about cloud computing cost development. We'll jump into that a little further on. I'll touch on that a little bit more. In terms of activities, this is not by any means an exhaustive list. This is simply an example of a lot of the activities that we're seeing around manufacturing. So starting with lean improvements, process automation, development KPIs, you're looking at your process and product and testing it, validating it. There's so many examples here, but use this as a reference point in terms of what your organization is doing. Robotics can be included this as well, advanced manufacturing techniques. When we're talking with our clients, right, all we really want and encourage them not to do is to disqualify their activities. All we want is data and a conversation, with payroll information, with what we've seen in P&L statements over the last couple of years, and a conversation, we'll be able to find all the projects that are qualified. All right. And sometimes once we have that initial data, we have an additional follow-up question to get a little bit more into the weeds. Our goal is ultimately to deliver full claim value. Leave no stone unturned. All right. So just a good bunch of examples here. What can be claimed? What can be claimed? All right, this is kind of repeats, but now that we have that good base knowledge, we now have activities. Hopefully, you're thinking about some of these projects. All right. So again, what can be claimed in all of this is going to be the salaries of those directly involved, those supporting, and those supervising. That vendor ecosystem when it comes to the subcontractors, 1099 employees. We're looking at also the raw materials and supply costs. All of this is important for us to understand, even the computers, right? In terms of cloud computing development costs, right? Landon, to your question, right? There can be development of code, engineering that can ultimately qualify, right? So when it comes into any sort of computer engineering, coding, development, back end, if there's a customer front or focus of it all those costs can be captured. Again, those can be the wages or even the cloud computing expenses as well. What's important here is for us to understand your financial flow, how your work is getting done, who's doing it, and everybody that's involved. Quick little case study. Numbers are cute. This is 34 employees, vendor ecosystem of $200,000, serial material supplies and $1 million. We use the calculation models, and ultimately these are the results that we drive. So while the results are important, it's equally important for you to understand our process. As educators, we're looking to take a conceptual conversation and ultimately show numbers. So we make that easy. We offer a complementary feasibility analysis that will allow us to determine a low end and a high end of where we expect your benefit to fall. If the low end is of a material amount, then we're moving forward. We're capturing and showing what the real numbers will be. We generate the pro formas that ultimately go off to your CPA to do the filing and amending as necessary. And then we provide a comprehensive report defending all of our positions. Naturally, we include audit defense in our work as well. Folks are worried about audits. We stand behind our work as we're doing it. Now, to get to full claim value, data has to be rock solid. So usually when we're doing our initial analysis, we're able to educate in future and subsequent years the best way to catalog and capture that data so that in the next year we can get to that full claim amount.
Thanks, Gabe. So just about to launch the third poll right now. And you should see that on your screen. Which of the following is not likely to be eligible activity for the federal R&D tax credit? So go ahead, get your answers and responses in. We'll leave it open for a couple of seconds. Routine quality control testing on finished products, designing prototypes to test new manufacturing processes, modifying a product to meet new product technical requirement.
Look at that.
Yeah.
Oh my gosh, students.
Same idea, huh?
To refine a new product. So I guess this is more of a quiz question, but Assuming that you know R&D, or maybe that you've been paying attention to what Gabe's been presenting on, I'm going to close the poll in 5, 4, 3, 2, 1. All right, thanks. And back to the presentation.
So
All
kind of
right.
kind of the back end here of the presentation. Obviously, we've got some grant opportunities. So, Gabe, start us off with those.
Yeah, grants are very, very exciting. You know, who wants them? Everybody. Who knows how to get them? Not a lot of folks, right? They've been around. Grants are out there, absolutely. You know, non-dilutive funding, there's subsidies, it's free money, as we've heard it said. You know, the grants and incentives are really an amazing way for businesses to fund their future projects, right? Whether it is around capital expenditures, innovation efforts, it's a great way to allow the government to subsidize your projects. And they're included in a number of different industries, and they can be in varying amounts as well. They are often very much seasonal. We see a lot of activity in the spring and fall, and usually these grants will mirror government initiatives. Really, really good example a couple of years ago, if you can think back to again, another automobile industry, there was so many cars, not only on car lots that were unsellable, but they were in random parking lots as well. Just look to the side of the highway, there's just random cars. They couldn't sell them. They were missing computer chips, the semiconductors, right? And that was at a time where all of the imports coming in were being delayed at the ports. What the government realized is that they were not self-sufficient when it came to computer chips or semiconductors. So what they did is they created the CHIPS Act. The CHIPS Act was $500 billion with a B dollars that were allocated for the semiconductor industry. So primary, secondary, and tertiary folks within that were able to participate and expand their business based on their initiatives. Another list. I love this, the middle and right category in terms of areas of opportunities. We see a lot of activity here when it comes to facility modifications, increasing production and capacity, improving efficiency, new products. Awesome stuff, especially when you think about the current administration. Current administration is all about reinvigorating the backbone of America, manufacturing. So we're going to see a lot of programs and incentives that come out that are going to expand the manufacturing footprint within the US. Couple that with anything that is green, more energy efficient, you're going to have tremendous, tremendous opportunities. Next slides are some more categories that we see. Research and development is actually really, really cool. Meaning if you're coming up with some cool stuff, it's really innovative, there's an opportunity, there's a market for it, the government really could be interested. Hiring and training exists as well. Usually those are at more of a state, local level, but states vary in terms of what they make available, but they're out there. With grants, you need to be forward looking. Right? You need to understand what your goals and initiatives are 2, 3, 4, 5 years down the line so that you can be proactively mining and looking for these government grants. And I'll touch on that in a little bit, go a little more deeper into it. Next one, federal. Federal is easily the largest and the most competitive areas of funding opportunities. That's where the CHIPS Act was a federal, right? So high competition, but big dollars to be available, eligible for, right? They can range from several thousands of dollars up to multiple millions. The agencies that we see a lot of activity from, NIH, DOE, NSA, and the DOD as well. I'd say it again, you got to be prepared. There are deadlines for these. Once a grant opportunity is opened, you want your application put in then. There's specific requirements for them. There's a lot of technical writing. If you're awarded the grant, then there's back-end administration as well. Think of that as a glorified expense report. You have to prove the spend, show the spend before you actually get your funding back. These programs that are right here, some examples, I'm going to encourage you to go to grants.gov. Go to sam.gov. Look and explore the grants that are currently available. They're out there. We're happy to help. We do all the mining for them. We show you through a funding report the areas of opportunity, but they're listed right there.
Yeah, and then back on the state and local tax side, thanks, Gabe. to Gabe's point, they're provided by state and local agencies as opposed to the federal. That's probably a duh or a no dur. Hey, Gabe, comment. But typically a little smaller, but not always the case. They are good for startups. We have some that are, like I said, smaller, local businesses, large spending, innovation initiatives, hiring initiatives, any of that stuff, a big CapEx spend. I used to make jokes giving this presentation that said, if you're hiring, expanding, growing, doing R&D, if you're doing anything at all, you should be looking into state and local credits. And the reason that I'm biased, but I like them is because they're usually easier to get, right? So there's less competition. And if you check all the boxes or jump through all the hoops, or however you want to put it, you get that grant, you get that incentives, you get that abatement. So much easier to do. I have some recommendations of where to look. The point here is that there's 25,000 programs across all 50 states. So a lot available. Income credits, payroll credits, property tax abatements, exemptions, grants. So again, no matter what you're doing, there's usually something out there for you to go and get. Couple quick examples. The top one there for Massachusetts is a smaller example, right? So if you're trying to set up, you need to buy some new machinery, that would be a great grant for you. The New Jersey manufacturing program was actually signed into law last month, and you can see there for bigger manufacturers, right, up to 150 million per project. Obviously, a few more hoops to jump through, but certainly something to look into if you're in New Jersey. But these programs exist in every state, so make sure you're taking advantage of them. Again, workforce training, kind of saying the same thing there, but lots available to you. And we got a last couple slides here, so
private funding.
Go ahead.
Oh,
Judy.
sorry. I was just going to say, before we go into this, I just wanted to launch the last poll. So this will be the final question.
Okay.
And you see that on your screens for everyone to answer. The question is, do you have a plan for HR1 OBB? So just kind of prep me up for what's going to be coming in the last couple of slides of this presentation. Yes, we have a detailed plan in place. Yes, but it's still in early stages. Not yet, but we're exploring options. And no, we don't have a plan at this time. So I'll keep this open for just a couple more seconds before Gabe covers grants and private funding. And we've got this open, and we'll close in 5, 4, 3, 2, 1. Thanks, everyone.
Yeah. Let's see if we can move up here to the OBB, because I know that's on people's minds. So Gabe, I don't know if you have some stuff to share about that.
I just wanted to put a button. Thank you. What you said before about your grants. You had mentioned about state and local grants. Sometimes they're less competitive, fact. And sometimes what we're seeing with our clients, they need to win smaller grant opportunities first before they can win the big ones. You establish a history with the government. You show that you're a good steward of their funds, then that opens you up to bigger, better opportunities. I've had clients that have actually been contacted by the state when they've had an excess of funds because they needed to get rid of them because they used them well in the past. So
some of those funds are also transferable, right? So you can sell them to sister companies or someone that you know for cash. Gabe, that's a great point as well. So last couple slides here about OBB or
so
OBB.
or HR1. We're not political here. But in early July, all of this came into play, and there's, typical with our government, there's stuff that we know and there's things that we don't know just yet. But one thing that is very, very clear is that qualified small businesses less than $31 million a year who initially capitalize R&D costs may elect to amend and undo the capitalization and claim to, full R&D expenses. There's a deadline to do this of 1 year. And basically, what we're moving towards is the old methodology of capturing the R&D tax credit, that of 2021. Now, for the other businesses from 22 to 24, we're still waiting on some guidance. So if you're over 31 million a year, the IRS, just like with the employee retention credit, right? We're still waiting for their updates on this. It's only been a couple months, so I guess we need to be patient. But we can look forward to 2025, where all companies can accelerate remaining amortization of 22 through 24 capitalized amounts, 100% in 25, or 50% in 25 and 50% in 26. Pretty awesome. Like this is very exciting. We can claim the R&D tax credit for tax year 25 and fully expense domestic R&D. So really awesome stuff. So
Yeah,
very exciting.
and the other thing there for any potential listeners, for manufacturers that are looking to own their building or build new buildings, right? There is that QPP provision within this new act that allows quicker depreciation, not only on personal property, but also on real property as well. So that's certainly something to look into if you're looking to own your building, build something out. Could be very powerful. I think that kind of pulls us to the end here. So just a recap. Obviously, we've spoken a lot about state and local taxes, all the innovation that that Gabe talked about. Energy efficiency we haven't even touched on, but there's a lot there as well for manufacturers and beyond. So a lot to do, a lot of things out there. Gabe, I don't know if there's anything else you wanted to add on this slide.
You know, what's fun about this slide and in our approach is that it allows us to really take the time to understand our clients and what they're doing. And so when I started off, we started off the conversation talking about past, present, and future. Many of these incentives, we have the opportunity to do it. When we're engaged with our clients and we're walking through these areas of incentives, understanding what they're doing, we just work as a natural extension to their business. So we catch you up on the past, bring you to present day, and we start talking about your future with grants. Very exciting.
Yeah.
All right.
That's it, Judy. I know you're going to kick us off. So
yes, no, I was going to say thank you, Gabe and Brian, for presenting this in-depth and informative session. I think we still have a couple minutes now if we want to use this time to answer any questions that were submitted through the Q&A. A couple that I wanted to bring up and ask about specifically. So why is innovation funding tied to state and local taxes? I know, Brian, you kind of addressed this earlier, but if you wanted to provide a more in-depth response.
yeah, no, like I said, we wanted to make sure that we were calling out to all manufacturers. So refund reviews obviously are huge for manufacturing. It's cashback, it's great. Any innovation, so Gabe talked a lot about R&D stuff. If you're doing R&D in your manufacturing process, that's going to be exempt towards refund review as well. And then, of course, the state and local taxes, any of that innovation plays into SALT as well.
Awesome. Thank you. There was a question about R&D and cloud computing development costs. So if someone could elaborate a little bit more about how cloud computing development costs can be related to R&D, that would be great.
Yeah, we touched on that earlier.
Yeah. The only other question that I saw, Gabe, was a question about the R&D opening up to audit. Any concerns there?
Very common misconception and absolutely patently false. You know, the R&D tax credit is part of the tax code and tax law. It exists. It's out there, right? The only time you're being exposed to audit, Brian, you even said it, sometimes audits are done at random. But because you are utilizing part of the tax code to your advantage does not make you susceptible to an audit. Yeah.
Yeah, you talked about we have the legal team, we have the engineers, we have the CPAs to make sure that it's we're playing by the rules, we're maximizing the credit, doing all the right things so that you don't open yourself up to that. So
correct. And when I talked about the range, the low end and the high end, right? To get to that highest amount, that full claim value, you've got to have data. If you don't have data and you can't support it, then you can't rightfully make a claim. Right. We will educate our clients on what they need to get to that amount. We're not going to subject our clients or ourselves to that audit risk.
Awesome. Well, thank you both. So before closing today's webinar, please be informed that we will follow up with you directly if you've submitted any questions that were not addressed or answered during the session. Again, we are immensely grateful to Brian S. and Gabriel Derr for their contributions to this course, and a special thanks to our webinar attendees for your participation. If you'd like to schedule a call with any of our experts, please go ahead and scan that QR code that's on the screen right now, or you can also get the code from the presentation handouts. We hope to see you at a future Leyton Learning event, and please check out our website, www.leyton.com/US for upcoming webinars. Have a great day.
Thanks,
Thanks,
everyone.
Jude. Thanks, everybody.
Right at the buzzer. Right at the buzzer. We nailed it. Thanks, everybody.
Thanks.